And we're back, guys. Welcome to another video this week that isn't, we're not going to talk about quarterly earnings or trimestrals. We're going to talk about probably the best kept secret in the stock market. Stock market, you can buy ETFs. You can buy large cap stocks like Tesla, Apple. I mean, you can invest in even inverse ETFs that'll let you play the market, but at least play against the market. Bottom line is there are so many financial instruments, but probably the best kept secret is, believe it or not, penny stocks, small cap shares, small cap companies. And the reason why I say this is because when you're looking, let's say like I am, I love commodities lately. I think commodities are going to be on a bull run for the next 10 years. With everything that we have at our disposal today, everything that we can use. We have computers, we have cell phones, everything, electronics, even your cars now need minerals, they need metals. And when you look at these sectors and you figure that production is only going to need to go up because demand keeps on rising year over year, well, when you're looking at commodities, you're thinking, okay, let's say I like gold. Gold's at 1,724 US. Now I can't buy physical gold because it could cost me much more. And trading the commodity futures contract is gonna ask me a lot of money if I want to start maximizing my gains. So then I gotta go down and look at ETFs. Well, ETFs are gonna cost me, $30, $40. So where does that leave me? Producers? Well, producers are gonna cost me again $5, $10, maybe $20. So what's left? How can I get exposed to these markets without sacrificing too much of my buying power? Well, that leaves me with probably the best kept secret in the stock market, the penny stock market. Now, I can see everyone coming. Penny stocks, they're risky, they're a gamble. I mean, you'll read the internet, you'll find tons of guys that have been had. But when you look deeper at these companies, or at least some of these companies, and you start doing your research, for example, let me pull up a graph for you guys. Look at this company, Azimuth Resources, okay? Now, mind you, I have a Bloomberg. Our company at Invercio, we use a Bloomberg. We like to do our research. Whenever we do content for you guys, we try to give you the best information possible, the most accurate information. That's why we trust Bloomberg. But we are building that platform to give you that same data for free. So stay tuned. But going back to our Bloomberg terminal, let's take a look at this company, Azimuth Resources. Now the stock's at 86 cents. Now, penny stocks typically under $1. Everyone thinks they're risky. But let's look at the shareholders. Now, if you're in Quebec and you see Caisse de dépôt and placement du Québec, that's one of Quebec's biggest investment funds. And you see them here for 6 million shares? Well, that tells a story. Then you go down the list and you see Dynamic Strategic Growth Portfolio, which is 1832 Asset Management. 3.2 million, almost 3.3 million shares. You go down the list. Royal Bank of Canada, Franklin Advisors, Power Corp, which so happens to own Wealthsimple. Now, mind you, they only have 500 shares or almost 600 shares, 600,000. But mind you, still, why are these people here? And how is this a risky stock, a risky penny stock, a gamble? I mean, it could be, but for the amount of leverage that you're getting, and we're blurring out the other names here, but trust me, why are all these people here? And if you did go on Bloomberg and you could find this information on other websites, which we won't name, but if you do your research and you start looking at the pedigree of these investors or these funds, you start realizing that there are some big players in here. There are some wise people that have been following this management, or at least the current management of the company for a while now. And they're putting their trust in this company, but they're not putting it blindly. Because for the amount of shares that they're expecting something of this company. So obviously you have to do more research. You got to look at what they're doing, the decisions they're making, how they're paying themselves. This is an exploration company. So what's their drilling plan look like? You have to do some research. But bottom line, at the base, if you look at the current shareholders, it gives you a good idea that this company, there are some individuals that see something in here. And when you look at the pedigree of these individuals, the risk factor sort of, drops a little. Let's take another company, ECR. which probably is going to pop up right now. So ECR, which is Cartier Resources. Let's look at the current shareholders. Agnico Eagle. Agnico it's an exploitation. I mean, these guys they have mines. So they're producing. Agnico owns almost 50 million shares of this company. Let's go down the list. Again, Caisse de dépôt, Placement du Québec. Almost 12 million shares of this company. This is a penny stock trading at 10 cents and a half. If you look at these lists, but you just look at the first two ones in this case, Agnico Eagle, O3 Mining, and Caisse de dépôt, even rougher at 7.5 million. I mean, those are big shareholders. Shareholders that have a heavy stake in this company. And I mean, is it really risky? Like I said, you have to do your homework. You have to find this information. You have to sift through. You have to look at what their plans are. But again, is this really risky? I can't say this enough. The penny stock market is wildly misrepresented. Everyone considers that market very, very risky. But again, when you look at the pedigree of these investors, how heavy they are involved in these small stocks, the risk factor drops a lot. I can't say this enough, guys. If you want to get exposed to commodities, to precious metals, look at exploration companies, because the stock price is so low that it gives you a high amount of leverage. You could buy more shares with less money. Now, yes, there's always a risk, but again, I look at these investors. Is my risk really there? Guys, this is probably the best kept secret in the stock market. And I'm not just talking about these two companies, which are not our clients, by the way. We have clients that you should be looking at. But regardless of that, these stocks you won't hear about. But the investors that are here, they know the management personally. They've been involved in these companies or with this management from previous companies. They've had success. And again, if they've had success once, chances are they'll have success a second time, a third time. There's a reason why these investors tend to follow management from company to company. I can't say this enough. Is this the best kept secret in the stock market? I think so. It's a great way to get exposed to precious metals, to minerals. It's a great way to dabble in this commodities market without risking too much capital. It could be $500, could be $1,000. You'll get a lot of shares. And in this case, if you look at Cartier Resources, which we probably still have up, at 10.5 cents, if this stock goes all the way to $1, I mean, that's 10 times your money. That's a huge return. Yes, maybe you're gonna hold it for a little bit longer term, but again, take that return at the end of the day, or if you sell some on the way up, take that return divided by the amount of time that you're holding it, and trust me, those are huge percentage returns in your portfolio. So guys, like I said, not really risky in my eyes. And on that, we'll see you next week.